not only are we going to have a busy 60 minutes, but it was a busy week as well. And on Friday, we had a roller coaster ride. But for the week, Derek, it was pretty good.
Right. One of the stronger weeks we've seen this year. In fact, all major averages closed up despite the fact that the yield on the 10-year Treasury went up 22 basis points.
And so how did we do in the S&P and triple Qs for the week?
Well, the S&P was up north of 3%. The NASDAQ up more than 4%. Small caps up 2%. Again, a small dent in some of the declines we've seen recently, but there's growing optimism that perhaps the rate of increase by the Federal Reserve is going to start to diminish as we go forward.
And you talked about the Treasury's movement, and of course, we watch that very carefully, and we are, to some extent, Fed obsessed, really, because we have to make sure that at some point they're going to stop raising rates. But, this next rate raise we expect at 75 basis points. But there was some news made by one Fed governor this week.
Right. FOMC member Daly out of San Francisco discussed the fact that while they do feel that she did feel they would raise at 75 basis points in the next meeting, there's going to be a very spirited discussion about the forward path of interest rate hikes. Her feeling is that they're getting to the point now where they may be hiking too quickly, and I think market participants were cheered by that comment.
We saw some CPI numbers that remained hot last week, and shockingly, the Fed had said early on that inflation was hotter than expected. Obviously, in retrospect, that is true, but it is painful, and the Fed now has a difficult job. And so they're going to try to raise those rates despite if it causes a recession. And one of those indicators is the Treasury bills. And when we compare them from one to another in what's called inversion, that is telling us something.
Right. There are any numbers of ways to look at inversion by comparing, say, the 2-year note to the 10-year bond, or the 3-month T-bill you referenced to the 10-year bond. And what we saw this week is that one actually inverted too. And in the 8 prior times that occurred, there was a recession subsequent to that. So that's causing many people to be a little bit concerned about forward estimates for the S&P and what the real valuation of the market currently is.
And we're watching those Treasury rates because obviously there is some concern, and we're watching what's happening around the world, and some just stunning news out of the UK this week. Their newly minted prime minister only lasted 44 days, and so now she is out, and they have to find a new prime minister. She did last slightly longer than that Pope John Paul in the 1970s, but it was a short stay, and it's really causing disruption around the world.
Well, yeah, and if you think about we're having difficulties in the United States, think about the UK. Energy shortages, the strong dollar causing anything they import from the United States to be more expensive, sluggish growth, and just a malaise throughout the EU, and that's causing Europe to essentially freak out. And the longer this war with Russia and Ukraine continues, the more vulnerable they're going to be to energy shortages this winter, to the point where, they're talking about turning off the Eiffel Tower, for example, at night and things of that nature. So what we're facing here in the United States is not nearly as bad as it is what they're facing overseas.
And the good news there, of course, folks, is that we have been an oasis over here in the United States with our investing. Even though it's been down, it's been a very painful year, down significantly for the year in both stocks and bonds. But there are companies here that are doing well. You mentioned energy, and energy has been a bellwether, and earnings are starting right now. So we're going to keep a close eye on earnings as they come out.
Right on Friday, energy stocks were making new annual highs. We also heard some good reports this week from Lam Research, a semiconductor company, IBM, Netflix, Procter & Gamble, and the major banks. Really, the only big report that was negative, in my view, was Tesla. They didn't meet their output goals. But again, that's a very expensive stock with a lot of momentum behind it, but a valuation that is still very high.
And so we talk about a recession, and one of the famous bond managers, Gundlach, puts it at a 75% chance that happens next year. And of course, the stock market and the economy obviously are not in sync at the moment, and sometimes the markets will bottom long before this recession occurs. So we're going to have to keep an eye on that. And as we have a rally as we have had this week, how long does it continue? Does it go into the election and beyond is something we're going to watch. And of course, the Fed meeting comes right before the election. A lot of news coming up. Keep an eye on your portfolio, folks.